Investors in June once again focused on trade negotiations and the Federal Reserve's monetary policy. Heightened tensions between the United States and Mexico resulted from threats of tariffs on Mexican goods over concerns about immigration and border security. Meanwhile, President Trump and Chinese President Xi met at the Group of 20 largest nation summit and agreed to resume discussions on trade, providing some optimism to investors. Other geopolitical issues causing reactions from investors included a threat of military action after the U.S. accused Iran of masterminding attacks on 2 oil tankers and downing a U.S. drone aircraft. This helped send oil prices 9% higher in June. Stocks and bonds rallied in the month, with the S&P 500 hitting a new all-time high and the yield on the 10-year Treasury note dropping below 2%. Many attribute the drop in yields to the June meeting minutes from the Federal Reserve, which raised the possibility of rate cuts in the near future to forestall what many perceive as tepid economic growth. However, non-farm job growth in June touched 224,000, easily topping expectations and alleviating some worries about a slowdown in the economy. Our chart of the month explores 10-year government bond yields in Japan, Germany, and the US. Yields in these major economies declined due to the uncertain economic conditions we've recently discussed, prompting global central banks to consider easier monetary policy. For more on all of this and how it affected our fund performance, please check out our latest monthly investment report, which is now live.